Yeah, thanks a lot, Kevin, for another insightful discussion. And also thank you to our panelists and for you, our audience, for sticking with us. We have two more great panels for you in store, so please bear with us because we now want to turn our attention to another really important issue. A lot of people talk about it. We read a lot about it in the news, but really we don't really have so many experts with a really deep understanding of it. And what I'm talking about is cryptocurrencies and crypto assets. And thus, it's even a bigger pleasure for me that we have our own Bitcoin expert here with you, who will be your host for the next two panels. We can already see him. It's Patrick Hansen. He's our head of blockchain and crypto, and he will talk in the next two panels about crypto, about CBDC, and about stable coins. So again, feel free to ask questions, feel free to connect. And Patrick, thanks for being here. The stage is yours.
Thanks a lot, Kim. Happy to be here and happy to discuss on this panel the topic of crypto assets from hype to establishment. As you mentioned, crypto assets are all over the news nowadays. So there's barely a week where there's not a big company announcement related to crypto assets and cryptocurrencies. There's barely a week or a month where there's not either a rapid market growth or a rapid market crash. There's barely a week where there's not some major event in the crypto space. A couple of days ago, for example, there was the first nation state globally, El Salvador, that made Bitcoin a legal tender in El Salvador. So quite some news. And in the next 40 minutes, we will try to discuss those market developments. We will try to distinguish between the noise and the hype about crypto assets and what's really behind it, what's really driving the whole sector. And I'm more than happy to be joined by four absolute experts on that topic in Germany, Dr. Anika Patz, who is a senior associate at Elberstadt Sutherland, Veronica Fiesta, who's a senior director at the bank 1031, Christopher May, who's a co-founder and co-CEO of Finoa, and Simon Seiter, who's head of digital assets at Deutsche Börse. And I would suggest, before we jump into the topic, let's do a quick introductory round. Let's maybe take 20 or 30 seconds to quickly introduce yourself and what you do in the space of crypto assets. Maybe let's start with you, Anika.
Yeah, sure. Hi, everyone. I'm Anika Patz. I'm working for Elberstadt Sutherland, as Patrick already mentioned. Previously, I also worked for the Börse Stuttgart Digital Exchange as an in-house counsel. And yeah, I'm in the crypto field now as a lawyer for 3 years, because I'm a lawyer for 3 years now. And yeah, I'm also aware of the security token offering, started with that, and then custody business. And yeah, that would be me.
Perfect. Over to Veronica.
Yeah, thanks for having me. First of all, I'm very honored to speak here at the Bitcoin panel. I'm Veronica Fiesta, also known as Vicky. I'm director at the 1031 Bank. This is the fintech arm of WEG Bank, a German established bank. And together with our partners, so like the Litecoin Foundation, Animic Foundation, Salamantex, EFIN, Silica, and Tangany, we are building an ecosystem, a unique ecosystem in DeFi. And yeah, our mission is driving mass adoption of digital assets.
Great. Christopher.
Yeah, very cool. Thanks for the invitation, first of all. So Chris, one of the co-founders and CEOs of Finoa, German-based custodian, very much focused on the B2B space, so institutional investors, professional investors, ranging from venture capital funds to family offices to corporations like Deutsche Telekom, T-Systems, for example, and basically building on top of custody fully fledged service solution, starting with staking, moving into brokerage and trading at a later stage. So serving institutional investors holistically.
Lastly, Simon.
Many thanks, Patrick, for the invite. Simon, working as head of digital asset at Deutsche Börse, previously with Commerzbank, did some use cases here in the security space and the payment space, and now building an infrastructure for digital asset and integrating it into the existing infrastructure in a way that ultimately I hope that the digital assets will be in your custody account.
Perfect. So quite some expertise here compiled in that panel. I would say before we go down some of the deeper developments in that space, as for example, the tokenization of securities or decentralized finance, let's start with some more recent analysis of current events and what happened in those last few weeks. We have seen quite some dramatic market crash from all-time highs of, for example, Bitcoin of 65,000 down to currently, I think, around about 37,000, so almost 50%. Let's quickly discuss what happened in those last few weeks. So what exactly contributed to that market crash and was responsible for that? Maybe Vicky, do you want to start?
Yes, thank you. Well, a lot of things happened in the last years and mainly in the last weeks. As you mentioned, almost every day something new is popping up, and we have a lot of press articles, what's happening in crypto and financial space. And I named three main reasons. The one thing is we have regulatory changes like the Crypto Custody Act in Germany. Then we have, of course, new involvements in blockchain technologies, because next to Bitcoin blockchain, the most famous one, we have also Ethereum, which is raising, because with Ethereum, you can do a lot more. Bitcoin is seen as a store of value, and with Ethereum, you have the possibility for smart contracts. So you can do a lot more with these blockchains. For example, which brings me to the third point, the DeFi products like flash loans, lending, and staking. And so all these news make a roller coaster out of the blockchain space. And so, yeah, and for me, especially one news kicked me in the last weeks, and that was Elon Musk's statement, which has also a huge impact to the space, because he's like a role model, and his statements are very important. And so if you want, we can dive more into this discussions, but I'm curious to hear what the other experts think of the latest involvements.
Yeah, so apart from maybe Elon Musk tweeting about Bitcoin, what are some metrics, what are some indicators maybe that help us understand the recent market developments? Chris, do you want to add something?
Yeah, I'm not happy to do so. So I mean, yes, there was a lot of noise about like Elon Musk tweeting, ESG discussions, and so on and so on. But if you take a look at it from a, say, financial perspective, right? So over the last, let's say, 3-6 months, what we have seen is a lot of retail involvement into the market. I mean, we have Bild Zeitung here in Germany writing every day which are the 3 top coins. I mean, what you have been seeing, and also if you take a look at the numbers and the analytics, that a lot of, let's say, new wallets have been opened, which is a clear sign that that a lot of new retail investors have been coming into the space. Like all the centralized players like Coinbase, Kraken, and so on, they were down because they couldn't handle the demand. And in this hype, basically, yes, there were some bad news, and those bad news on the one hand side affected the retail investors who got insecure, started to sell. And the second very, very important point is something which you don't read in the news, but there are a lot of, let's say, financial investors, traders coming into the crypto market, like hedge funds, long short funds, and so on and so on. And obviously, if there are like big movements in the market, they get accelerated by those traders, by those investors. And especially, I think it was like the first real crash when it was down like 20-25% a day, what you could have seen if you took a look at the numbers is that a lot of short positions or options or futures, however you wanna call them, they were triggered, and then it happened that there was like a very big sell-off. So I think this whole volatility space or aspect is also related to becoming more and more, let's say, occupied by financial investors, by traders who are not in there to invest, but just to make money, right? So short-term trading, et cetera, et cetera. And I think this is something which accelerates and intensifies the market volatility. Maybe how do we look at it? I mean, us serving mostly crypto native investors or institutions, we didn't see any impact with our own customer base. So nobody really was intending to sell. And the least movement, where are those volatility spikes are coming from? And it's not so much from the people who are in the game for long-term horizon, but it's rather more on the, let's call it, gambling side, trading side. And I think what we have been seeing, yes, might hurt in our private portfolios or also in the assets under custody we have. But for the long-term success, I always say it was a healthy correction. And to build a sustainable system, we'll always have like those highs and ups and downs. I think that's what every innovation has seen over the last 50, 100, whatever years. And it's similar in crypto, right?
Yeah, so a lot of new retail investors coming into the market and selling again, and a lot of leverage being liquidated along these crashes. Simon or Anika, do you want to add anything?
Anika, you wanna go ahead?
Go first.
Okay. I think what we can still see is that this is partially quite an inefficient market, simply in terms of the market mechanisms. And I think that these issues of price allocation are especially also with large ranges actually in the prices, yeah, and therefore some good business being made also still in the brokerage space, yeah. We can clearly see that this is something that is still not there where we want it in terms of stability, also in terms of market stability of trading, yeah. And this is why we see these peaks, and an individual can clearly see that simply because of few little events, even like tweets, influencing the price like that. That's not really mature market behavior. I think the price will, or I hope that volatility will stabilize over time simply by the market more maturing. And how does the market more mature? Not maybe with more retail investors, but with more institutional investors. So my personal hope is simply that we keep going, like professionalizing the market a bit, getting therefore also professional investors inside, yeah, and thereby spreads will also tighten, which is good ultimately for the people. Because honestly, of course, you can bet on it. You can always bet on assets, but people lose money where there are spreads that are quite high, yeah, and where they might not get the right price. And this is, I would say, something that is out of an ESG perspective, out of the S in the ESG perspective, not really discussed. So I think there's this inefficiency of markets is socially unfair to some extent. Yeah, I think this is an issue that has to be addressed by professionalizing the market. And for me, actually, the events that we see right now, which have triggered market movements, are still part of the noise, so to say. But yet there's a lot of noise. So we have to get the market to a point where there's maybe only little noise. Yeah.
Or where there are noisy people, but it doesn't influence the market as it did. But what Simon said, I would totally agree. And I also see that now more advanced businesses or bigger banks are looking into the field, or investment firms and also funds. And I think this will also kind of do good to the market in order to see, okay, how's the price developing? And they will not take those spreads they will currently get at different exchanges. But what's also, I think, one important point or another important point is most of the crypto exchanges we see worldwide today, they're not always operating as an actual exchange, like a multilateral trading venue. They are more or less broker dealers or market makers. So they can actually say, this is a price you have to pay me. And it's not an exchange of this is my offer and this is what I pay to you. And then we have an actual market price. But I also see that I think Bloomberg also will provide market prices and data of post trades, and there will be provided as such. So it will be easier, I guess, to compare in the future prices of different venues and to find what is the market price of a Bitcoin as of the day. And so this is also developing.
Yeah, what is important is that we need more institutionals to come into the market, but because they are also under high pressure, I guess, because also like banks, the low interest politics sets them under high pressure, so they need some alternatives. And and so they are looking for different asset classes like Bitcoin, for example. And we need to smooth out the volatility, and that gives trustworthy to other institutionals and market players, private investors. And that's why it is important to have role models like Elon Musk not playing with these emotions, because he should be a little bit more sensitive and responsible in his statements. He cannot say one day, "Oh yeah, we invested in Bitcoin with Tesla, and we accept Bitcoin as a payment method." And a few weeks later, he makes a statement on Twitter saying, I realized Bitcoin has a high energy consumption. This is, in my opinion, this is stupid and it's wrong, because nobody can tell me that Elon Musk was not aware of the Bitcoin energy consumption, which comes from the mining farms. And so he is playing a dangerous game in my mind, but that's my mind, and I hope that this will not appear again. But in my opinion, I think in a few weeks he will announce with Michael Saylor from MicroStrategy that he is building a green mining farm, and then I think the price will rise up again. But we can dive more deeper into this discussion. But I think we have other important topics here on this panel.
We will see if your projection, Vicky, is true or not in a couple of months. But I think we shed some light on the question, what happened recently. Clearly some external factors, the Twitter discussion, the ESG discussion, but also apparently some internal problems such as liquidity and trading venues. And let's now shift the discussion to more deeper developments in the crypto space. The title of the panel is From Hype to Establishment. And I think everyone here in this panel is aware of the fact that the market was driven in the last 12 to 18 months by a lot of institutional interest. We already mentioned that. And I'm interested just in your opinion, and maybe Chris, you can take that, since as a custodian, you talked to a lot of financial institutions. What caused that spike in institutional interest into crypto assets? Why, after years of really doubt and fear towards crypto assets, in the last 12 months, basically all bigger tier 1 banks and financial service providers are tapping into the crypto asset space?
I think there's no one single reason for that. I think maybe I go step by step. So I think one thing definitely which triggered the interest of institutional investors into the whole crypto ecosystem was clearly driven by the central banks starting to print money at let's say at magnitudes which haven't been seen before. And I think this was one of the trigger events, but it was not the trigger event, I would say, because I mean, they are printing money since the beginning of the financial crisis, right? And I mean, the whole aspect of Corona was also one thing where people got more and more, let's say, familiar with decentralization, decentralized concepts, and so on and so on. And I think if you go back even like 2 or 3 years ago, what you see is that across the whole world, there's a mistrust in intermediaries, in governments, in institutions in general. And I think you see WhatsApp on the one hand side with the new GTCs getting a lot of traction to Signal, Telegram, and so on and so on. You see states which are basically losing the trust of their inhabitants. You see institutions like central banks losing the trust of the people. And I think the whole events over the last couple of years, they basically were bundled beginning of last year when also Corona broke out. And this gave the crypto scene another hype and let's say another acceleration, aligned with central banks printing money. And then I think the real trigger point for, let's say, 99% of the institutional investors was the first movers. Like, yes, everybody's talking about MicroStrategy. I don't think that they had such a high impact on the market. It was rather when PayPal announced they want to go in. This triggered a lot of players here in Europe, but also in the US, getting more and more, let's say, focused on crypto, interested on crypto. And I think with each of those, Vicky called them role models. I think there are also some role models in the corporate world. With more and more corporations moving into this space, everybody was basically saying, okay, I shouldn't miss this one because I maybe missed it in 2017 and I don't want to miss this again. And I think this whole sentiment of, yes, crypto was omnipresent since 3, 4, 5 years. And everybody was talking about it, if it was about like asset allocation, high net worth individuals going to their family offices and asking them for years if they could invest into Bitcoin. And this was basically all, let's say, gathered and collected, and it needed this trigger point. And there were a couple of trigger points around spring, early last year. And I think since then, what we have been seeing, yes, there were some movers already, but there's still a lot of interest in the market. And I mean, we got interest from players where I would have bet that they would never go into crypto. And the very interesting question now is, which institution or which corporation will survive the downward spiral we are going right now? Because I mean, what we have been seeing when there was the regulation about the crypto custody license coming into place beginning of 2020, we heard that every bank basically in Germany wants to do it. You don't see so many banks, and Simon is smiling, you don't see so many banks in the market right now because most of those banks stopped their initiative. The question is how many of those initiatives which we are seeing are really coming to the end. And this is like the interesting thing to watch over the next couple of months, 1 to 2 years. But I think in general, it's not a movement over the last 12 months. It's something which was prepared over the last 3 to 4 months. Curious to see how this is actually developing.
In my opinion, you're absolutely right. If I can say something to this, my opinion, the disruption will not come from Germany. We are just a small country and far away from other countries, because as you have heard in the news, El Salvador announced to have Bitcoin as a legal tender. And there are other countries which have high inflation. So they are looking for alternatives. And the disruption will come from these countries and not from Germany. Germany is a good, role model for regulatory things, like they did with the crypto custody law and for the Electronic Security Act. But yeah, in my opinion, disruption comes from somewhere else, and so we have to hurry up because do we want to be controlled, for example, from China, which is on the forefront, or USA? So yeah, we need a little bit more braveness and politics and quicker decisions.
2 points maybe to add. I think Christopher was kind enough and polite enough not to mention one reason that I personally see quite impressive, and that is the correlation of interest of corporate development correlating with the Bitcoin price. And for whatever reason, maybe due to the fact that also sometimes decision makers act similarly than uninformed investors, this triggers initiatives in larger corporations or also kills them. So this is something that I would still see, and it's still on a large scale FOMO, actually. But as long as the price is rising, good for us. The other point I would say is I have to protect a bit, I would say, our politicians and regulators, because to be honest, moving or looking at the space and all the diverse players in it, they have moved first, I would say. Yeah. And this is something which I highly appreciate, and I'm very thankful for, that we have seen the crypto custody law, that we have seen the law on electronic securities now not only being like prepared, as there are some projects on the corporate level being prepared, but they really put it through already. So from a regulatory point of view, I would say, well, I completely agree with Vicky with regards to Germany not being the major player on the market. Yeah. But from a regulatory point of view, I guess we are quite now ahead of the curve, and really a good sweet spot to actually move any kind of business case regarding digital assets forward.
Yeah, I would just add, I think the regulation we have in Germany for crypto custodians and also for trading crypto assets, that it is actually regulated and not, as we see in other countries, that it's not. I think kind of fostered also the belief of institutionals to have a look into these assets and to kind of work with a regulated entity and not just someone who's offering me a storage solution who disappears to, I don't know, nowhere. So this is, I think, was really helpful in Germany also to attract institutionals from abroad and also, to give some speed to this. But I also see that I think the next step would be to have a harmonized European regulation. It's already upcoming, but still in discussions, markets and crypto assets regulation, and then also pilot regime for DLT MTFs. But Vicky, I totally see the fear as I follow the discussions around central bank digital currencies and electronic euros, that we're kind of might be left behind. But this is, I think, a different asset. It's money. The other thing is, what is Bitcoin? What is the security? But in the end, it kind of goes hand in hand if you look at settlement layers. And so we would need, I think, a European approach, and Germany made a good step, but I'm afraid there might be an over-regulation upcoming with regard to some anti-money laundering provisions, like implementing the travel rule, which will be challenging, and I think might be hard to implement now without having a common standard.
Yeah, we will definitely have some work left on that and discuss that also within our Bitcoin working groups and with all our members. But maybe Vicky, from your perspective, talking and working at a bank, in your opinion, what is the role of banks in that crypto industry, in that future of the financial industry? Do they have to basically build those new business models from scratch and provide custody, or should they maybe cooperate with young startups, custodians such as Finoa and others? How should they approach the whole new sector?
Just one sentence to Anika's statement. I want to add, we need the harmonization. This is very important. And I think the strict recommendations come from lower knowledge, maybe, because this is a very new technology and very complex and confusing, sometimes also for me. But we have to educate the people more and more, and so they are not so scared of cryptocurrencies. And to your question, now, yes, I think that we will see in the future a lot of big companies cooperating with startups, because both have an advantage. The startups are more agile, more flexible. They are highly motivated. So because what I've seen, we are talking to many fintech and startup companies, and yeah, they are really driven and want to change something and have great ideas and new approaches, and that's great. And on the other hand, they come to some hurdles, maybe the funding, or yeah, the experience or regulation. And so yeah, this is our approach. We are building ecosystem. We are saying the IT, for example, is not our strength. So we cooperate with partners from the industry like Nimic Foundation or Salamantex, and we drive together the projects with them. Even if we are also a small company, we are not big, but I see more corporations coming.
Perfect. So let's now briefly discuss some of the hypes and buzzwords in the space. For example, asset tokenization or DeFi. Maybe let's start with asset tokenization, especially of securities. And I guess that's the perfect question for Simon. A couple of years ago, everyone suggested the market cap for security tokens would very quickly basically outpace the market cap for crypto. And I think it's safe to say quite the contrary happened. So what is holding the whole asset tokenization market back?
Yeah, I think it's quite easy to say. The security stuff is more complex than putting up a token. And guys that came from the token side, I mean, they didn't understand it maybe in the beginning. And secondly, also what we've seen as a kind of initiative is, if we start having security tokens, how they are sometimes called, yeah, I just like to call them digital securities because it also depends on the technology if you have a token or not. But whatever, if you have these digital securities, what we've seen is they were largely issuer platforms. And this means basically at best, there's one platform with many issuers. At worst, there's one platform per issuer. This means that all investors do have to onboard with these platforms individually for one investment. So you can ask yourself, how many investments do you want to make? How many platforms do you want to onboard? Nobody will invest in that. Yeah, investment works in multilateral markets. Yeah, that's a kind of easy thing, because you want to buy a security that's ultimately going to end up in your custody account. Yeah, and even we are like the aficionados of this kind of business. If I think about my father, he will never register at a platform only to invest in one asset. That's totally uncomfortable for him. And so I think personally, the goal has to be that we get these kind of assets into the regular front end, at least where you invest. I have to say that I think that Trade Republic made a good step here, because ultimately it doesn't maybe need to be your custody account, but your front end of your investment, yeah, or your bank, basically. And so Trade Republic did this with crypto some days ago, where they're enabled with a backbone that is pretty well known in the German market as well, that you can trade crypto within your Trade Republic account. Yeah, I think banks could do similarly. At best, my personal view is that you really get the crypto assets and the digital securities into the existing custody accounts, because this is where people also buy it. And for digital securities, this is kind of obvious for me, because you have to have an ISIN, for example, still for security. Yeah, this stuff is not gone. Yeah, you still have to use it. And if you want retail investors to buy it, then I think you should go where 99% of the retail investors are. And this is at multilaterally traded markets where they have custody accounts at their banks that are connected to these marketplaces. And so for me, the goal has to be that we get it into the custody account. However, then I'm done. The thing is, the German law now foresees that traded instruments have to be kept on a central register, which even I, from a perspective from a CSD coming, I would say I would like this to be opened up a bit, yeah, because we ultimately can only leverage the technology's advantages if we can also register traded securities on distributed networks.
Maybe Chris, as from your perspective, how do you look at the whole asset tokenization market, and how many of your assets under management are, for example, securities?
Oh, I mean, second question first. I think less than 0.2% or so. So indeed, basically, it's completely neglectable. And I think Simon said one very, very important point. It's the access which the issuers have to the investors, right? And I think this is like the main problem, because you do not see any concentrated platform where you can invest into security tokens. That's the thing number one. And thing number two is also, if we are brutally honest to ourselves, the very, very interesting products to invest to or opportunities to invest to are not yet security tokens, but they are still basically issued the old traditional way. And I think what I'm always saying is there are those flagship projects which are tokenized, which are security tokens, and which will then create like another hype, because this hype is not coming from the let's say the investor side, but it has to come from the issuer side. And to create a hype, it has to be or they have to be like very interesting products which you can invest into. How do I see it? And I mean, you stated in the beginning that we at Finoa did a market study back in the day, and yes, we also imagined that security tokens would be coming way earlier. But to be very honest, I don't see this coming too soon indeed. I mean, if we get this front end problem solved, yes, then you might see more and more investors coming into the space. But then, as said, on the other hand, you also have to have this issuer platform or the number of issuers. And right now, there's no incentive for an issuer to do a security token, except of, let's say, media presence and so on and so on. And those issuers who get their products placed, why do they need media attention? And it's like a chicken and the egg problem. And the question is, who moves first? So as said, we do not see any movement in that space. It's completely cooled up. And the question is really, who will move first? The issuers, or will there be like some brave institutions who now say, okay, I want to issue my investor, to offer my investors also security tokens? So I rather see that on a closed system. And I mean, there are some use cases or some pilot projects, I think was Commerzbank and Daimler and so on, where something like this happens on blockchain. But for the mainstream market, this might take some time.
Or market infrastructure providers, Christopher.
Yeah. Say again?
Or market infrastructure providers. Maybe
we go where the opportunity is. Yeah.
Good to hear.
Anika, do you want to add anything? Is there anything legal challenges, for example, or legal changes on the horizon that could open up that market and change that?
Yeah, okay. On the horizon, I think there's a pilot regime, but I don't really know if this is going to do anything for the market as of now. As Simon already mentioned, it goes hand in hand. You have a security, you want to trade it on a regulated market, you cannot do it now without registering it with a CSD. And so why would I issue then on a blockchain if I have to put it in a central register, and blockchain infrastructure doesn't do any good? But I think if we look further in the future, there will be like more the open bank approach and also the open wallet approach, a decentralized bank. Maybe I will see that I can go with my wallet to any bank and say, I just plug in and I want to buy here. And I do not have to go through a KYC for every provider I want to use. And maybe then might get more interesting for the space.
Okay, so I guess we will come back next year or in a couple of years at the Digital Finance Conference and basically then discuss where the security token market went in those years. It remains to be seen. Unfortunately, we also already were already at the end of this discussion. We obviously only scratched the surface of many topics, but thanks a lot, everyone. Thanks a lot, Dr. Anika Patz, Christopher May, Simon Seiter, and Veronica Fiesta for your insights. Hope to see you back soon at the big Bitcoin events and Bitcoin discussions. There's definitely a lot of work left to do. And for those who are interested in topics of stablecoins and central bank digital currencies, stay tuned. We will just move on with another panel